The CPI came out, nothing too crazy. Market did move. Let's take a look straight away. For me, the S&P, the general markets, they look bearish after the move. Now, something I've noticed is that sometimes the move really happens 1 or 2, sometimes 3 days after the data release, whatever that data is, even FOMC. Now, I don't know if that's going to be the case today. We do have news today, don't we? We have news every day, but yeah, Michigan consumer sentiment that seems to move the markets recently. You can also see its maximum relevance. Also, PPI, obviously, that will definitely move the markets. So we have to take that into account. Maybe that's the catalyst we need to close the week with a certain candle for each asset, for each sector. I think it's going to be a bearish close for the week. I think we're going to have a red day. I think the S&P has come back down to this horizontal 3 times now. So clearly that is support. I think we're going to go lower today. And I think if we do go lower, I don't know about this ascending holding, to be honest. So we could start to look like we want to go down to here, 430 on the S&P. Okay, I'm not looking at resistance, I'm looking at support because that's how adamant I am that it's going to be a question of where support is rather than resistance. If you look at the Nasdaq, that's already lost its ascending, it's already gone below its horizontal. And okay, we have 3 candles here, gap close stuff, but I think we have to go all the way back down to 358-ish. Makes sense. So I think we're going to have a bit of a drop today, and that will set up more of a drop next week, at least to this zone. You know, we're not talking about bearish stuff yet. Look where we are. It's ridiculous. We should come all the way back down just for the Nasdaq. Just come all the way back down to test this ascending at least. You know, whether we just go a little lower, we've got to come back down here. S&P, same sort of thing. You know, it's not like we're bearish yet. Test this ascending, but I think by the time we do, it's probably going to be too close. So it probably overdo it, and you know, it's about to close. But again, don't know if that happens today or on Monday. Probably today, actually. The Dow Jones, look at this also. This is pretty bearish stuff. Look how high it went. Touched all the way up here, went higher than here. Then it comes all the way back down, closes there. Okay, it would have been worse if it closed below yesterday's candle. But still, you know, quite a lot of resistance is the point. Obviously, I think it's going to go lower down to here. If the S&P and the Nasdaq do their thing, the Dow Jones must at least come back to the horizontal breakout. It should be a magnet at this point. The Russell, that had the worst close relative to all the others. It ventured very high, closed lower than it has last several days, ventured lower than the last couple days. Obviously, the horizontal is support, and if we go lower, then you know I don't see any support until down here. So I don't know how much of a move down that is. That's asking quite a lot from the close. Yeah, 3-4%. I can do it in 2 days, 2 bad days. But I think it will happen. I think we'll come back down to ascending support. But for that to happen, you need the banks to come down, I reckon. Let's look at the banks. Ready to come down. Look, they're on their ascending. To be honest, then they're not that bearish. I mean, they're just holding. So if there's good news that I can't fathom at the moment, there's no reason why I can't just pop back up and then continue its breakout up here. But yeah, it's just if the markets go down, this kind of has to come back down. Support is not too obvious at this point. It's going to be a rough area. I don't know if this sending would prove or whether it's just a horizontal. But yeah, you know, around, let's say 34 at least, if not 33.50. So 33.50 to 34. If it does start to flush, that should be the first area of support for the XLF. The KB and the KRE, they're easy to identify. I think today we do actually go and touch 40 KBE. And then next week, or unless today is horrible, then I think it's 38. You can see why. And there you have more support. You should fall in with the ascending KRE. You know, same thing. 45, if not a little lower into this area. Let's see what happens today. Okay, those are the markets and the banks. The interest rates now, okay, the 1 year is just sideways, a little bit of a move up so far this morning. But let's look at the 2 year, 2 to 30. That's where you can really see what yields are really doing. The reaction to CPI was up, yields up. You know, inflation is not tamed. Then we need yields to remain higher or remain high or go higher. So yields go up, and you know, look at this. This is getting coiled. I mean, I don't need to draw this trend line in, but you could do that and say, okay, which way you're going to break out, just so I have an earlier indication. And for now, you have to admit the way up seems to be the path of least resistance. So, but again, we're in the middle. I think today will be the real direction day for the markets and for the yields, and probably for the yields first, and therefore the markets. So let's see what PPI brings. I think that's the key. And if it's similar to yesterday, then up. And if we go up, we're going to go higher, and then we'll make new highs. This could really be the day that decides which way yields go in terms of new highs of the bear market or back down, and maybe it's a double top. So I think it's pretty important today. 5 years, same thing. Look, yesterday was up. I'm doing this Friday morning. And if it's another up day, then I'm sorry, that looks super bullish. There's like triple breakout just for this area. Then here'll be a cup and handle, whatever. It's going to go up 10-year. Look at that, even better. This 1 day up today will almost, you could even have a new high. You could even close at 4.2 if it's a strong reaction to PPI. 30-year, same as the 10-year. We could close, 4.36-ish, and then you're guaranteed to go higher next week. And then for me, the markets just have to tumble. So all of the charts will coincide, and I think we just have yields going up and markets going down. Let's look at the dollar, because that also has been moving with yields. Okay, today, just so far this morning, nothing actually. What am I talking about? But look at yesterday. Okay, you can see the support was this 102-ish zone. But look at yesterday, it was coming down. And then look at that massive hammer, closes above yesterday's high. Best close since all of these days, close outside the descending. For me, that's bullish. It's just going to go sideways up, just like yields. I favor a move up. Obviously, PPI will have an impact. So if PPI just pushes the dollar down, that could be enough to say, okay, no, we go back down, not yet, but it'll probably retry. It'll probably retry, because look at this bounce. If it was just a bounce to here and it rolls over, okay, forget retrying. You got to flush. But the bounce was so strong that if we do go back down, it's probably going to have one last go. Probably curl around here, 100.8, 101, the old support. But because of yesterday's candle, and if PPI is bullish for the dollar today, we're going all the way up here. And then we look very strong. And then you've got a lot of resistance. It's not allowed to go through here yet, but it's going to look super strong at a very critical point, and if it does squeeze here, it's going to be like gas at $3. I think, it could really squeeze. And then you got to think, well, what's going to happen to commodities? Or maybe it's going up also with the markets going down, and maybe commodities are rallying, or at least precious metals. So there's that to consider. But I think the dollar, interest rates, and the markets now are all at a very, very important inflection point. So let's see what PPI does. But so far, dollar looks good. I mean, bullish, and along with yields. All right, commodities, which I forgot to do yesterday. Yeah, copper very sensitive to yields, markets, and the dollar. So dollar up, yields up, market down. Obviously, that equals copper down. So copper wasn't so strong yesterday. And look, it's starting to lose its ascending. The ascending is not too important because it flushed it before. And when it's done it before, it doesn't become this like virgin trend line. But, I think we're going to come back down to here, 3.69-ish. Who knows? It depends what happens today with PPI. If it's a very strong reaction and commodities are getting brutalized, you could close below that. I think going all the way down here is a bit too aggressive, but that would be the next level of support. So on the way up, same resistance. So let's see. But so far, weak natural gas. Now that gave some back yesterday, but look at the move. I think the damage is done to the bears. This huge move up indicates, no, we're going higher. Resistance perfect, obviously $3. Well, actually it took out $3. So resistance from the last high was the real resistance. You can see that on the first try, and on yesterday again. We've come back down, but I think the damage is done. We closed above the descending. It's just retracing. This is kind of normal stuff. But then again, it did it last time, and the retracements were aggressive. So hopefully it doesn't just give it all back. It should really now curl, maybe go a little lower. It can do that, but curl, go back up, Let's draw this. Why not? Well, it's obvious. Curl, go back up. Forget this. This trend line can go. We don't care about it anymore. And yeah, break out and then go all the way up. Not in one go, you know, nothing goes up in a straight line, but just staircase or big up, down, retest 3 for one last time maybe, and then basically go to $4. So let's see. The natural gas looks good despite the big retracement. I hope it doesn't care about the markets or the dollar or yields. It shouldn't. Yeah, but natural gas, still love it. Oil, yeah, popped its head above, closed above 84. Just a little back yesterday because markets, dollar, you know, for me, it's this ascending that still needs to be closed below before you can move lower. I know a lot of people think, oh, it's closed at 84. Now we can go up to the 90s. That's true, but it's done a hell of a run. And this could be a fake out also. So watch out that, you know, it closes there and goes all the way back down. And then before you know it, you're in the mid 70s and you were buying at 84, trying to get to 90. So watch out. It's had a nice run. I do think it's going all the way to 100 and all this stuff, but you know, that's done quite well. And you should have trimmed some on the way. I would have trimmed below 80 and then definitely 82, 83. And then whatever you trimmed, you can buy back if we go, let's say down here, you know, 77, maybe 75. But buying at 84, well, you can do that if you want, but just be prepared to buy more lower, you know, don't go all in here. Anyway, point is, you know, it's still bullish because it hasn't closed below this ascending, but I definitely think it needs a healthy retracement. Otherwise, we should go all the way to 94. Uranium, strong. I mean, you know, not the best candle, closed near low of day, but look where it ventured yesterday. Compare that to the other commodities, given the dollar, the markets, which uranium is pretty sensitive to also. Uranium just wants to go all the way up. It's just waiting for the excuse. It wasn't allowed to do it yesterday. Otherwise, if the markets were up, the dollar was down, it would have already probably closed above 23.3. So for me, uranium just wants to go up, and it's a beautiful chart actually at this point. It's just consolidating sideways up. So very nice. Okay, gold and silver. Yesterday at one point benched all the way up, hitting this descending resistance. That's nice to see that work. You know what? I don't even think about gold and silver right now. I think about the dollar and yields and a little bit the markets. Gold is, I mean, you've got your near support, right? Support is 1900-ish, just above. You can see this blue little thing. It depends what if the dollar rolls over. Yeah, gold will just scream up. It wants to go up. It deserves to go up. It's come down a lot. It's around support. So I don't even know how much sense it makes to just look at the gold chart because it's really about the dollar and yields. Otherwise, this is a good buy zone. You know, if the dollar starts to go higher, which it can do, and yields, what if yields start to make new highs? What if the gold squeezes at that 103 zone and goes up? You got to look what's below. This support, it's very weak support. And to be honest, if you start flushing 1900 with volume, you're gonna have to look lower than that. So 1860, I think we're, you know, PPI, what's PPI going to do today? It could just reverse and gold would make a really good floor here. So depends on the news, depends on the dollar and yields. Otherwise, it's pretty much near this 1900 support. That's all I'm going to say. I think we have 1 or 2 days before it's critical to start looking at support below 1900. I don't think we need that yet. Resistance on the way up. It's quite hard to tell actually. I mean, old resistance was 1940-ish, and you can see these two candles here, you know, and obviously, so if I was to draw it like this, it looks more obvious. It's just, are you allowed to extend that through? You know, it doesn't really make sense here in the recent candles, so I prefer not to have it. We know that it was there before. So this just, yeah, I'll just leave it. Resistance, I'm not too sure, actually. I'm just not too sure right now. And it doesn't really matter. Silver, yeah, it's come down a lot. Let me remove this. Apparently it's taken it out, but I don't know. Again, with the dollar, it needs gold to move. It needs the dollar to help it. You know, the dollar needs to go down. Yields need to soften. The market, I don't know if the market's too relevant. That's one thing. What if yields and the dollar rise and everyone gets scared and, the market's going down, then people start buying gold and silver because the market's going down. Just like Bitcoin went up the other day because of this banking downgrade. It sort of felt like it could be that period again where you buy gold, Bitcoin, silver, and you sell everything else, as the banks and the markets go down. So maybe that's a secret little hand that the precious metals have that we don't consider too much right now. Otherwise, silver has come down to match gold. This whole way down, it started to catch up with gold on the way down. It was outperforming for a while on the way up, definitely, and even on the way down earlier on. Now I think you're pretty much where gold is, so it can go a little lower. For gold to get to 1900, silver will be around, I don't know, 2230-ish down here, with the floor just above 22. And to be honest, just below, just as gold, just below, in my opinion, has a small level of support. And you could have that fake flush, like, oh, gold down, PPI is horrible or whatever. And it goes to 1885 and then rallies aggressively and then closes above 1900. You could have one of those. That would be a good day. I would prefer that. Gold ends up down $10, but it actually went down 30 intraday, but closed above 1900. That would be a good day. You could even have miners green. Gold is down $10, but the miners are green. That would be a really good, healthy, bullish reversal kind of day and good close to the week. And silver could do something similar. You could have silver down and then it actually flushes, but then this ascending should really react, so you could have silver down with an aggressive close. Again, silver could be down, a couple of cents, but actually very nice looking candle. So that would actually be the best situation, unless it's just an instant reversal now. But again, we're just a little bit above support, but we do have, in my opinion, silver more than gold, strong support just below this horizontal low. Resistance on the way up, not really going to consider it yet, but yeah, I'm not going to consider it yet. I'm going to redo my charts over the weekend. These are old lines and they probably don't apply actually on the way up. Let's look at the miners, because again, the miners, in my opinion, were not bearish. I mean, look, this is just sideways action. The miners are just saying, "No, we're not going down yet," even despite the CPI and PPI. Will that be similar? Will that be a sort of non-event or not much of a reaction? Don't know. If gold and silver do go a little lower for that 1900 moving gold, you could have the miners go down again, but you do have these little mini support zones, and you can tell there's already strong support where we are, which makes sense because we are at support. So maybe we have also a little, it's a bit like this day here, this sort of hammer, it's a green candle, but it was a red day on this 8th of August. And I think something similar would happen, as soon as let's say there's a gap down at the open, they just start to rally and react inversely to the markets. Imagine the markets go down, the miners just rally, in an opposite direction. So I do like the miners down here, I must admit. If you look at yesterday, the Newmonts, the Agnicos, the Barracks, they were kind of unchanged. There were some that were up. Pan American Silver, I believe. There were 2 miners that I own that got slaughtered though on earnings. Thank God I don't have too much in and I spread it out. Coeur d'Arlène, which is one of my favorites on the way up, and Fortuna. But it didn't really hurt my overall portfolio at all. But I did nibble a tiny bit, just in principle. But yeah, I think the miners are a strong support. And actually, if they go a little lower, there's also strong support immediately lower. And you've got to consider what gold and silver might do, and all the other sectors, dollar and yields. GDXJ, same thing. We can go a little lower. There's support there. But look, so far we're holding just above here. So, and you'd expect the GDXJ to be down here if the GDX is down there. So for me, the miners are actually quite bullish. They're strongly outperforming, but the metals now are also at a stage where they could reverse. And if they go a little lower, I think there's strong support there too. So miners could be a good buy now. Could be a good time to start adding a decent tranche. But what about the dollar? What about the dollar? Could it start to go to 103 and squeeze? That, I'm sorry, that would take us all the way down here, and the miners definitely, all the way back down there. And gold and silver, we'd have to talk about gold, in the 1860s. And you just have to zoom out and say, yeah, we're still bullish. We're just down there now. You could even go down here and still be bullish. you know, because you got to zoom out and consider what's going on here. And the dollar will reverse and start to flush at one point once the real inflation towel is, the towel is thrown into inflation, because these are all just gimmicks. You just got to play the game to get the best prices. So let's see what happens with PPI, the dollar, yields, markets. Bitcoin, nothing doing, just sort of holding. But look, so far hasn't come all the way back down again. So this could be a little curl to move back up. Let's see how it reacts to the markets. I think the market's going to go down. Let's see how it reacts to the Nasdaq as it used to. Does it go down with the Nasdaq, or does it start to act in the opposite direction? Maybe it's acting opposite to the banks. And to be honest, the banks will go down with the Nasdaq. So let's see. But so far, it's not bearish or bullish. It's just curling, and it's made a new move up. So let's see if it goes back up to test this 30,000. And if it does it get to squeeze, or will it just come down with the markets? All right, that'll do PPI today, and then a nice weekly video to follow. So good luck today.